Welcome back to Financial Freedom FX. In this video, we're going to break down a powerful and unique trading method called the CHoCH trading strategy. This isn't just a random name, it's a Confluence-based approach that combines smart money concepts, price action, and market structure shifts to help you catch precise entries and ride strong trends. Whether you're a beginner or an intermediate trader, this strategy can help you gain consistency and confidence in your trades. So make sure you watch till the end, because I'm going to show you how to use it with real chart examples and a powerful conclusion. The foundation of the CHoCH strategy is built on one of the most basic but powerful concepts, market structure. You need to learn to identify higher highs and higher lows in an uptrend and lower highs and lower lows in a downtrend. This step helps you understand the market's current direction. Before entering any trade, CHoCH traders always analyze the recent price action to determine whether the market is trending or ranging. This avoids taking random trades and helps you align with the bigger flow of money. This strategy shows how to enter and exit both long and short trades using simple confluences. Every entry, stop loss, and close is clearly marked, so you can understand how a professional trader approaches the market. So let's walk through this chart step by step. On the far left side of the chart, we see the first long trade marked with a green long label. This entry comes after a downtrend when the price begins to show bullish reversal signs. If you look below at the stochastic oscillator, you'll see it crossing upwards from the oversold zone below 20, which is our first bullish confirmation. At the same time, RSI is starting to climb up from a low level, supporting the buy idea. The stop loss for this trade is placed just below the recent swing low, protecting against a deeper drop. As the price moves upward and momentum slows, the trader exits the position, marked by the red close label. Next, we have a short setup in the middle of the chart. After a push higher, the market starts to show weakness. A bearish reversal candle forms, and the trader takes a short entry here. The stochastic oscillator is crossing downward from the overbought zone above 80, indicating a potential reversal to the downside. RSI is also turning down, confirming weakness. The stop loss is placed just above the recent high. As price drops, the trade is closed for profit once momentum flattens out, again marked with close. Moving forward, we see another opportunity to go long. This time, the setup is even stronger. The market forms a higher low, showing bullish structure. The stochastic oscillator again crosses up from the oversold zone, and RSI is clearly trending upwards. This double confirmation gives confidence in the long trade. The entry is marked as long, and the stop loss is placed just below the recent support. Price moves higher steadily, and the position is closed at the top near a short-term resistance zone. Near the right side of the chart, we see the final long trade. Price makes a slight retracement, and then bullish momentum returns. Once again, the stochastic crosses up from the oversold zone, and RSI continues moving upward. These indicators confirm that buyers are back in control. The trade is entered, a stop loss is placed safely below the recent low, and price climbs up. Eventually, the trade is closed for a clean profit when momentum starts to fade, marked clearly as close. Let's pause here and talk about how the indicators worked in Confluence. The stochastic oscillator was used to identify potential reversal points, either in oversold or overbought zones. When the stochastic crossed from these areas and RSI supported the move, that's when the trade became valid. RSI helped confirm the trend's strength and direction. You'll notice that every time both indicators aligned, the trade moved smoothly in our favor. Every trade on this chart had a calculated stop loss. Whether it was a long or short, the stop was always placed just beyond the structure, either below the previous low or above the last high. This is a critical part of the strategy because it helps manage risk while allowing the trade room to breathe. Having this discipline is what separates successful traders from emotional ones. This chart not only shows setups, but also reflects the mindset of a trader who sticks to a plan. Entries are not random. They are based on clear confluence between price action and indicators. Stops are always in place, and exits are done based on momentum signals. This is a simple yet effective way to trade that avoids overcomplication. If you master this approach, you can trade with clarity and confidence. Now, let's move into a more advanced level of chart reading, focusing on market structure. In this new chart, we can clearly see how price transitioned from a downtrend to an uptrend using clean structural breaks. Initially, price creates a lower high, LH, and a lower low, LL, which confirms a bearish structure. Every pushdown is stronger than the pullback, and each lower low confirms that sellers are still in control. This is a classic bearish market until something shifts. The key moment comes when we spot the CHoCH, or change of character, in the middle of the chart. This occurs when price breaks above a previous lower high for the first time. This is a major clue that the downtrend is weakening and buyers are stepping in. The CHoCH is not just a breakout, it's a signal that market sentiment is changing. Smart traders use this area to prepare for potential long entries, especially when Confluence builds with bullish price action or demand zones. After the CHoCH, we begin to see a new structure forming, higher lows, HL, and higher highs, HH. This marks the beginning of an uptrend. Price pulls back, forms a higher low, then pushes above the previous high, confirming the bullish structure. These higher lows act as strong support areas where institutional buyers often place their orders. This part of the chart shows momentum building in favor of the bulls, and every pullback becomes an opportunity to go long with the trend. As the uptrend continues, the chart clearly shows breaks of structure, BOS, to the upside. Each BOS confirms that buyers are in control and the market is making progress in that direction. These structural breaks are crucial. They not only confirm trend direction, but also give us valid reasons to enter trades with reduced risk. As price forms another higher low and pushes to a new high, we see clear, sustained strength in the market. In the final part of the chart, price continues to climb, forming another higher high, HH. The trendline support beneath price confirms bullish control. Traders using this information can either stay in their trades to ride the trend or look to scale in on pullbacks. This chart perfectly demonstrates how a trader can identify trend shifts using CHoCH, validate new trends through BOS, and manage entries by watching structure. When market structure and clean price action come together, trading becomes a lot more strategic and less emotional. This entire chart breakdown, from indicator-based entries to advanced market structure, shows how combining tools like stochastic oscillator, RSI, CHoCH, and BOS can give you powerful, high-probability setups. In the first chart, we saw how confluence between indicators helps time entries and exits with precision. In the second chart, we understood how price structure reveals the true story of market sentiment, from downtrend to uptrend using CHoCH and BOS. Whether you're trading with indicators or pure price action, the key is clarity, discipline, and structure. Stick to rules, understand the story behind each move, and never trade without confirmation. If you follow these principles, you can trade confidently and profitably in any market condition. And if you're serious about mastering Forex trading, don't forget to subscribe to Financial Freedom FX for more expert strategies, real chart breakdowns, and professional trading education. Hit the bell icon so you never miss an update.